But post that mega merger, it's important to take cognizance of where Gruh Finance as well as Bandhan Bank are up to after what looked like a sharply lower start. They're still languishing, about 4% lower for Bandhan Bank as we speak, and that pretty much should be the case for Gruh Finance as well. Started off gap down and hasn't seen any recovery since then, still lower by about 16%. But here's Nikunj analyzing the valuations of the HDFC Group stocks post this merger.
Whereas we are trying to discuss this entire deal from the valuation, from the standpoint of what it means for Bandhan, what it means for Gruh, what it means for HDFC Limited. For HDFC Limited, this is how the breakup is. 20%, now this is CLSS data, 20% of HDFC Bank or HDFC Limited has 20% stake in HDFC Bank, 52% stake in HDFC Life and 51% stake in HDFC General Insurance. So if I look at the sum of part breakup for HDFC Bank and the subsidiaries, large part of its sum of part valuation is actually derived from HDFC Bank and then HDFC Life. Gruh Finance does not even account for 5% of the total sum of part valuation of HDFC Limited, which means that for HDFC Limited, the Bandhan Bank merger may not be a large needle moving event. Now you may argue back and say that HDFC Limited, in this case, they've managed to sell their ownership in Gruh Finance at a price to book which is greater than 10, and in return they are getting assets of Bandhan Bank where the price to book is less than 10. So the advantage is with Gruh Finance and the advantage is with Gruh Finance and HDFC Bank minority shareholders. But before you get excited and say that, okay, this is going to change the way how HDFC Limited is going to be valued, I think you need to understand that HDFC Limited is a behemoth, their own business, the investment in bank, their investment in the insurance business, and their investment in the AMC business. So the sum of part, based on purely sum of part valuation, this is not going to be a needle moving event for HDFC Limited.
Yeah, that pretty much sets the tone for how one has to view this amalgamation, this merger, the combining of two entities, which from a geographical perspective seem like, there could be a marriage in the works. So we'll have to see how it plays out. But for now, I think the market is disappointed. Yesterday, Gruh Finance was higher by about 1.5%, but by the time we wrapped up the session, I think the market got a whiff that this may not be, from a valuation standpoint, a great deal. From a synergy point of view, I think the jury is still out. So 16% down on Gruh Finance. It's an expensive stock, very, very expensive stock. I think the price to book from a forward perspective is about 10.5, 11 times or so. Bandhan Bank likewise down 4% in the session, in addition to the kind of fall it witnessed yesterday. So I think the cumulative loss will be about 7-8% in two sessions, 477. At least prima facie, the market is not excited about these two entities coming together. But Gautam Chhugani, who's Director Indian Financials at Bernstein, noted financial analyst, joins in with his perspective on how he views this amalgamation. Gautam, it's great to have you on the show. Thanks very much for taking out the time. What do you make prima facie of the Bandhan Bank Gruh Finance merger?
So I think it's a good deal. It plays out differently for different parties. So overall, it's synergistic because both the entities are focused on financial inclusion. Gruh is focused on the affordable housing space. Bandhan is the largest microfinance company. So the customer base is very synergistic. But the way it is playing out for both sides is slightly different. You have Gruh, which is, you have HDFC Limited, which kind of trades off its stake in Gruh, which is a subsidiary, for a long-term stake in Bandhan Bank. So HDFC gets a stake in a very long-term, largest financial inclusion bank, which is Bandhan. And Bandhan, on the other hand, has a promoter dilution requirement, and hence it acquires a fairly large affordable housing finance company, but at immediate dilution to its shareholders, and hence the stock in the near term has reacted negatively. But if you look at the overall franchise, it becomes a full-service financial inclusion bank, and hence becomes fairly scalable in the long run. So Bandhan becomes the sort of the pan-India financial inclusion platform after this acquisition. So I think overall it's a fairly strategically aligned deal, but it kind of plays out differently in the near term and the long term for both sides.
Right. When can you expect the synergies to come through for both the entities?
So I think the synergies, the synergies are twofold. One is on the distribution and the product sides, and both sides have products which can be sold on the other side. So for example, if you look at Bandhan, most of its distribution is in the sort of central and eastern India. If you look at Gruh, again it is widely distributed, but a strong presence on the western side, particularly Maharashtra and Gujarat. What happens here is both sides, both Bandhan as well as Gruh, when they merge, you can sell the affordable housing product to Bandhan's clientele on the eastern and central side, and then you can use the microfinance product and scale it more on the western side where Bandhan is not that strong. So what happens is, so you can expect the synergies to, obviously the integration will take time and the merger will be consummated in some time. So at least I expect the synergies to start building up in the next financial year, which is FY 2021.
Right. So given the merger is accompanied with integrations issues, do you really think that this particular integration is going to be a big challenge when it comes to this deal?
Yeah, both, if you look at both the entities, they are fairly specialized, right? So what the merger doesn't really involve integration of the processes. This is not two microfinances companies merging where, they would have different processes and those need to be integrated. Both entities run different products and are fairly specialized. So in that sense, those two businesses are fairly independent. And hence, integration, I don't think is a major challenge. Obviously, to extract synergies, you will have to start training both the entities to sell the other product, and then that could take time, about 6 to 12 months before they start actually delivering the results. So integration is not a challenge, but sort of training and integration of the processes for different products will take time.
Right. So lastly, can you also talk about the outlook on the entire BFSI sector and what would be your top picks within that?
So I think we have let's just first talk about the overall sector outlook. I think broadly we believe that what is playing out right now in India is a consumer financial services cycle, and it's particularly discretionary consumer finance cycle. So we believe players which are sort of market leaders in the consumer finance space, particularly HDFC Bank and within NBFC's Bajaj Finance, are our sort of topics in the consumer finance space, and that space we expect to continue growing fast in the next few years as the cycle plays out. The second theme where we are extremely constructive on is financial inclusion, and financial inclusion has two parts. One is the broader microfinance space where Bandhan is our topic, and then in the micro SME lending space, which is micro SME loans, where AU Bank is our topic. So the four companies that we are positive on is HDFC Bank, Bajaj Finance on the consumer side, and then Bandhan and AU on the financial inclusion side.
Okay, Gautam, thanks very much. Great insights on this merger, which is now a reality, which the market is not liking, at least in today's session. We'll see how the story plays out and how much value can investors derive from this combine.